and welcome to Wion Wallet. I'm Chaiti Narula. Before we take a look at the top headlines for the day, the Finance Minister Arun Jaitley is talking on the GST, and finally it looks like that has come to some sort of a consensus. But before that, let's take a look at the top headlines for the day. The GST rates have been announced. The highest rate to be 28%. 4 tax slabs have been introduced by the Finance Ministry. Volatility index jumps 6.8% in India. Foreign portfolio investors sells share worth 667 crores on the back of polls indicating Trump's victory in the US presidential elections. Tata Sons Chairman's office in place. Chairman to be decided shortly. Ex-GC members get new roles. The fast-moving consumer goods companies in India that bank on consumer demands set to see a new high. And well, the big news is out. Finally, some consensus coming in there from the GST Council, and news is just pouring in as we speak. We're going to cut to our Finance Minister Arun Jaitley in a bit, but ballpark, what they have really come out with is that they are addressing the media live as we speak, and the approved rates have come in at 5%, 12%, at 18% and 28%. Remember, the GST bill implementation into an act has been hanging fire for the longest time, and finally the meeting took place between the centre and the state government, and finally we're getting some sort of consensus coming in. Let's listen in to what the Finance Minister has to say.
Detailed presentation on the state of readiness as far as GSTN is concerned, and they made a presentation as to what the present situation is, and they seem to be moving as per the schedule. They would be continuing to brief the GST Council from time to time on the state of their preparation.
Well, there you go. Arun Jaitley, the Finance Minister, talking on the consensus which is coming in from the GST Council. Now, we have with us joining live the Managing Partner of PricewaterhouseCoopers India, Ketan Dalal, joining us live from Mumbai. Mr. Dalal, welcome to Wion Wallet. Mr. Dalal, are you with me?
You. Yes, I can hear you, Chaiti.
Mr. Dalal, the GST Council has just approved the rate structure. The 4 slab structure has just been introduced as we speak, actually. What are you making of the consensus that has come on this front right now?
Well, I think as you mentioned, there are 4 rates, 5% for food grains, precious metals, as I understand,
right.
12% for industrial products, raw materials, etc., 18% for all other goods and services, and 28% for luxury goods. Well, the ideal situation, of course, is of 1 rate, but one understands that that may not be practical. One would, of course, have wished for maybe 2 rates rather than 4 rates, because what tends to happen is that the more the rates you have, the greater is the problem of classification, and the greater is the problem of litigation and disputes on that. So as I said, maybe 2 rates or maybe at the most 3 rates may have been better than 4 rates. The broad point is the lesser the number of rates, the better. But I think we are dealing with all sorts of conflicting requirements and different pulls and pressures. So I think while we have to see what the final situation that emerges, currently it appears that we are moving in the direction of 4 rates.
But still we don't have one uniform rate, which means the ease of doing business in India is still something that would hang fire for a long time. Do you think this 4 rate structure really works out in terms of what the reason why the GST was brought into the country in the first place?
I think, Chaiti, there are 2 or 3 different dimensions to it.
Right.
I think the GST is a path-breaking and a great piece of legislation, and definitely will lead to ease of doing business. For example, business decisions will be now taken not on the basis of fiscal issues only,
Right.
but business considerations. For example, where do you stock your goods? How does your supply chain work? So I think the fact that there are 4 rates will obviously add some level of complexity, but the level of complexity is in something which by itself in principle is a very good piece of legislative reform, because overall I think the ease of doing business will significantly go up, because see the number of taxes that are being subsumed in GST. I think it's about 12 or 14 taxes that are being subsumed, some state and some center. So whether it is compliance, whether it is registration, whether it is set-offs, I think the ease of doing business definitely will be enhanced as a result of GST, regardless of the 4 rates.
Interesting, because the 4 tax structure which has come out is at 5%, 12%, 18% and 28%, like you rightly mentioned now. Now, under the current circumstances, would you still call it a progressive reform? But it definitely looks like it is going to be benefiting the common man, so as to speak, from what I understood from hearing in from the finance minister talking at this point of time.
Chaiti, there is no question. See, for a minute, just parking the issue of 4 rates aside,
Right.
and yes, that is important, and that does add a level of complexity, as I mentioned. But it is most certainly a progressive reform. As I mentioned, see, for example, the cascading effect will be reduced.
Sure.
You have fungibility in tax credits. As I mentioned, stocking and supply chain. There is no question in my mind that it is an extremely progressive reform. My sense is it will take time to settle once it comes in, but overall I would definitely say it's a very progressive reform.
But how many tax slabs ideally, in an ideal utopian world, in an ideal scenario, would you have proposed for the GST Council to pass? Now, they've come up with 4 slabs. In an ideal world, how many slabs would have made the ease of doing business in India much easier? Some sort of consolidation there into 1 or 2 slabs
in an absolute
alone?
ideal world, yeah, you see, Chaiti, you yourself use the word utopian.
Right.
In an absolutely ideal world, I would have wanted 1 slab.
Right.
And maybe 2, at the most 3. Singapore, for example, has 1 rate, which I think is 7%. I think Canada has 8%. But remember, these are significantly, quote unquote, simpler countries than India, with a significantly lower population,
Right.
significantly less complexity. So while I would have ideally wanted 2 or 3 rates, one has to see the realities on the ground also. But as I said, regardless of that, I think overall it's a progressive legislation, and I just wish that the number of items in the outlier, which is 5 and 28, are very few. In which case, the way I would look at it is, it's like having 2 rates and 2 small outlier rates. Perhaps that's one way to look at it.
Would the differential rates right now lead to any sort of ambiguity, in your opinion?
So, Chaiti, again, these are all linked questions.
Yes.
So, whenever, as I said, you have different rates, you are going to have some kind of issue, but
Sure.
we don't know how many items there are going to
Right.
be exactly in what I call the 2 outlier rates, how they are going to be defined. But if I were to answer your question in a simplistic manner with a broad brush, the answer is yes. Obviously, when you have 4 rates, there may be some level of ambiguity in classification. But as I said, if there are lesser items in the 2 outliers on either end of the spectrum, I would think that the ambiguity, of course, can be reduced significantly. And I suppose that is what the GST Council and the government will also aim at.
Would you peg any kind of inflation going forward in terms of the prices? Can we expect some sort of an inflation to set in on the back of this?
See, I think there are 2 or 3 things. One is, given the complexity of our country and given how significant this reform is, things I think will take time to settle. So let's assume it comes on April 2017. My sense is that it may be some time before companies adjust their pricing, and I know for a fact that companies are currently engaged in pricing discussions because they are not 100% sure how the credits will work, how much they are able to renegotiate the prices with their own suppliers, and therefore how much they should charge. My sense is it will be inflationary in the first, let's say, 3, 6, 9 months till companies adjust to what they can do, and the consumers also adjust. But after that, I think things will settle, and I think perhaps 6, 9, 12 months down the road, I think GST will become inflation neutral after that period. But when you have a reform, Chaiti, of this nature, in this magnitude, you are going to have disruption in the first 6, 9, 12 months. And I sense that there may be some inflationary impact in this.
Right.
See, particularly in situations where credits are not available because the relevant industry is exempt, and therefore they can't take credit for their inputs, for example.
All right, Mr. Dalal, leave it at that. Thank you so much for joining us live here on the GST reforms. Now, just to wrap up our conversation on GST, we have 4 levels of tax slabs that have set in: 5%, 12%, 18% and 28% as well. And it looks like this is going to be making it easy for the common man, and some sort of an inflationary pressure might really set in the short period of time. But overall, it looks like a good bill. Moving on now, one glance at the global stock indices, and the markets are close to trading flat or are trading in the red. Indian stocks too are reacting to the possibility of Donald Trump coming to power in the US. The volatility index has jumped up 6.8% in India. The domino effect on the market is more than conspicuous. The VIX, or the volatility index, has shown an upward spike reflecting rattled investor confidence. The FIIs have made stake sales to the tune of over 650 crore Indian rupees in India just on Wednesday, after having sold 5,000 crores just last month. The mid-cap and the small-cap index has seen close to 2% fall, signaling volatility. Most sectoral indices ended in the red today, excepting auto and the FMCG sector that ended in the green. Market experts feel that a Clinton win will be giving the markets the much-needed hope of recovery. Let's bring in a markets expert now and get his overview on the overall sense of the global market and what he makes of it, rather. Now, Ashish, how is it that the auto and the FMCG sector is holding fort in the Indian markets while all the other sectors have ended the day in red? Does it look like the Wall Street and the Dalal Street have almost discounted Hillary's win as well?
Yeah. As you can see in the market today, as auto and FMCG, they are termed more as a defensive kind of stocks. So these were the stocks which hold it to the so-called gains. If it specifically talks of Hero Moto, which came out with record numbers, and we saw around 1.5% gain in that particular stock. Barring those sectors, those stocks, if you also see some metal stocks, when the government of India, continued the anti-dumping duty, so these stocks since last 2-3 days were in the gaining momentum, and they continued their momentum today. But nevertheless, talking about the Nifty, it broke 8,500 psychological support.
Right.
Due to the very big event which is which will be coming in following days. So the global markets, as you pointed out, are very volatile. Volatility index is also on a rising spree. We have seen around 20-25% rise in the volatility index in the last 1.5 weeks.
Right. Even there's a short-term dip in the global markets, and overall, if you look at the UK, you look at the Asian indices, you look at the Dow Jones, Nasdaq, S&P, everything is looking like they are profit booking in terms of the indices are trading in the red at this point of time. Now, do you think this dip is short-term in the global market, or do you see this kind of bearish momentum holding fort for a longer time in the markets?
More than the bearish momentum, it is the uncertainty which hovers around the U.S. presidential election. So I think this will continue for some time until the uncertainty is cleared and then the clarity on the U.S. presidential election comes out. So I think the bearish momentum would continue for coming few days.
Would you advise investors to hold on to their positions at this point of time, or is it too risky?
For a long-term investor, definitely the Indian story is good. The GST rates are out, so the government is at least on track on the GST per se. In the coming days, we'll be seeing the categorization of different products in different rate categories. So Indian story is still intact. So for a long-term investor, there is nothing to worry. But if he's a trader, he should be very, very cautious when he's taking a long-term, when he's taking a long trade. Also, as the volatility index is high, so the volatility for a short-term trader will be very vicious either side. So for a long-term investor, he has nothing to worry. He should buy on every dip. But for a short-term investor, if he is sitting on some profits, I would advise to take some profits at home, at least for now.
Well, it's not a market for speculators, but definitely for the long-term investor. So, Ashish, stay with us. We'll come to you shortly on the Nifty futures and the derivative markets as well. Talking about the derivative markets, let's take a glance at the impact the global market sentiment has on the derivative market in India. The net longs in Nifty futures made by overseas investors have fallen to the tune of 75% from September this year, signaling market volatility. The FIIs are no longer bullish in their stance. On the back of a weak market sentiment over US election run-up, they have sold shares to the tune of 5,000 crores. The key reason for this bearish sentiment can be blamed on overvaluation of stocks, the election sentiment playing spoilsport, and the expectation of an interest hike by the Fed at the next FOMC meet in December. Ashish, over to you now about the derivative market. Now, how's it really, let's talk about the Nifty futures now. What is the key reason for this bearish sentiment?
As you can see, that Nifty was consistently taking the support at around 8540, 8550 on the spot basis and on the future 8570, but it broke from that level. So technically also, the Nifty has come now into the sell. Another reason, if you see that the FIIs are in a continuous selling spree, if we talk about Nifty call options or maybe Nifty futures, the open interest on the short side has added on a very stick volume. So overall, if you look at every aspect, whether it is an FII activity or the open interest, every aspect, every indicator is saying that there is more bearishness coming on the way for the Nifty. I advise traders to be a very, very cautious view towards the markets when they trade in the markets in the coming few days.
All right, Ashid, leave it at that. Thank you so much for joining us here to discuss about the equity markets and, of course, the derivative markets as well. On that note, let's take a quick break right here on Wion Wallet. We will be back on the other side with more business news from around the world.